Hey everyone, Gary Jain here. Welcome back to the Ledger Labs podcast. So today we're talking about AI in accounting, but not in the way you might expect. Because I think there's this massive gap right now between what people think AI means for CAS firms and what's actually happening in the day-to-day operations. Like everyone's heard about ChatGPT, everyone knows AI is coming. But when you actually ask a firm owner, what AI tools are you using? The answers get pretty vague pretty fast. So I brought in Sam Worthington today. Sam works with CAS firms on AI implementation, not the hype, the actual tools. Sam, thanks for coming on.
Yeah, thanks for having me, Gary. And you're absolutely right about that gap. I get calls every week from firm owners who say, "We need AI." And when I ask what they're trying to solve, they don't really know yet. They just know they're supposed to be doing something with it.
Okay, so let's start there. When a CAS firm owner tells you, we want to implement AI, what are they actually asking for?
So the first thing I do is figure out if they're talking about AI or if they're really talking about automation. Because those are two very different things, and a lot of people conflate them. Like automating your bank reconciliation, that's not AI, that's just good workflow design. But using machine learning to predict cash flow based on historical patterns, that's AI.
So help me understand the difference, because I think a lot of people hear AI powered on a software feature and assume it's doing something magical.
Right. And that's exactly the problem. So automation is rule-based. It's if this, then that. Like if a transaction comes in from Amazon and it's under $100, categorize it as office supplies. That's automation. You set the rule, the software follows it. AI, on the other hand, learns from patterns. It doesn't need you to write every rule. It looks at thousands of transactions and says, based on everything I've seen, this transaction is probably office supplies, but let me flag it for you because it's a little unusual. That's the difference.
And if you're listening right now thinking, wait, so most of what I've been calling AI is just automation? Yeah, you're not alone. I think we've all been there. All right, Sam, so let's get into the specifics. What AI tools are CAS firms actually using in 2026? Like not the stuff in the marketing brochures, what's working in the real world?
Okay, so I'm going to break this into three categories. And this is based on what I'm seeing across probably 50 plus firms I've worked with in the last year. Category 1, AI for client communication. Category 2, AI for data extraction and categorization. And Category 3, AI for advisory and forecasting. Those are the big three.
Let's start with client communication. What does that actually look like?
So this is where tools like ChatGPT, Claude, and some of the specialized accounting AI assistants come in. Firms are using them to draft emails, create client-facing reports, write explanation letters for tax filings, basically anything that requires translating technical accounting language into something a client can understand. But here's the key. They're not just copying and pasting. The good firms are using AI as a first draft, then having a human review and personalize it. Because if you just send out generic AI-generated emails, clients can tell. And it feels off.
Yeah, I've definitely gotten some of those emails. They're technically correct, but they don't sound like a human wrote them.
Exactly. So the workflow that's working is AI generates the draft, accountant adds the personal touch, maybe references a recent conversation, adds a joke, whatever makes it feel real, and then it goes out. That saves maybe 60 to 70% of the time without losing the relationship.
Okay, so that's communication. What about data extraction? Because I feel like that's where a lot of the hype has been.
Yeah, this is the one that gets overpromised and underdelivered. So the idea is that AI can look at a receipt, an invoice, a bank statement, whatever, and automatically extract the relevant data and categorize it. And in theory, that's amazing. That's the dream. In practice, it works about 80 to 85% of the time, which sounds pretty good until you realize that the other 15 to 20% requires human review. And if you're not careful, You end up spending more time checking the AI's work than you would have just doing it manually in the first place.
So what's the solution? Do you just accept the 85% accuracy and deal with the cleanup?
Well, it depends on your volume. If you're processing thousands of transactions a month, that 85% accuracy is still saving you a ton of time. But if you're a small firm with, say, 20 clients and a few hundred transactions, you might not see enough benefit to justify the learning curve. The other thing is, you have to train the AI. Like, it gets better over time as it learns your specific client's patterns. So month 1 might be rough, but by month 3 or 4, you're seeing real efficiency gains.
So if you're a firm owner evaluating these tools right now, here's what I'm hearing. Don't expect it to be perfect out of the box. You're going to have to invest some time upfront to train it, and even then, you still need human oversight. Sam, is that fair?
Yeah, that's exactly right. And honestly, that's where a lot of firms get frustrated. They buy the software, expect it to work like magic on day 1, and when it doesn't, they give up. But the firms that stick with it and actually train the system, they're seeing 30 to 40% time savings within 6 months.
Okay, so let's talk about the third category, advisory and forecasting. Because this feels like the most strategic use of AI.
Yeah, this is where it gets really interesting. So instead of just recording what happened, AI can start predicting what's going to happen. Tools like Fathom, Jira, Runway, these are using machine learning to look at your historical data and project cash flow, revenue, profitability, all the stuff that a fractional CFO would traditionally do manually.
And how accurate are those predictions?
It depends on how much data you're feeding it. If you've got 2 years of clean financial data, the predictions can be surprisingly good. But if your books are a mess or you're a startup with only 6 months of history, the AI doesn't have enough to work with. That said, even when the predictions aren't perfect, they give you a starting point. Like, instead of building a cash flow forecast from scratch, you've got an AI-generated version that you can tweak. That's still a huge time saver.
All right, so we've talked about what tools exist. Now let's talk about the hard part, actually implementing them. Because I think this is where most firms struggle. Sam, what's the biggest mistake you see firms make when they try to add AI to their tech stack?
Oh man, where do I start? Okay, the number one mistake, and I see this constantly, is trying to implement too many tools at once. Like, a firm owner will go to a conference, see 5 different AI demos, get excited, and sign up for all of them. And then 3 months later, nobody's using any of them because the team is overwhelmed.
Yeah, I can picture that. It's like buying a gym membership in January.
Exactly. So my advice is always, pick one tool, implement it fully, get your team comfortable with it, and then consider adding another one. Because the learning curve is real. Even with user-friendly AI tools, you're asking your team to change how they work. That takes time.
Okay, so if a firm could only implement one AI tool right now, what would you recommend?
It depends on their biggest pain point. But if I had to pick one that applies to almost everyone, I'd say start with something in the data extraction category, like HubDoc, Dext, or one of the tools that automates receipt and invoice processing. Why? Because it's high volume, low complexity work that most firms are already doing manually. And the ROI is pretty easy to measure. Like if you're spending 10 hours a week on data entry and you cut that to 4 hours, you know exactly how much time you're saving.
And for anyone listening who's been putting off automating receipt processing because it seems too complicated, this is your sign. Start here. This is where you'll see the fastest return. Sam, what about the team buy-in piece? Because I feel like that's where a lot of implementations fail.
Oh, absolutely. This is huge. You can have the best AI tool in the world, but if your team doesn't trust it or doesn't understand how to use it, it's not going to work. So here's what I tell firms. Involve your team from day one. Don't just announce, we're using this new tool now, figure it out. Instead say, We're testing this tool to see if it can help us save time. We need your feedback to make it work. That shift in language from "this is mandatory" to "we're experimenting together," it makes a huge difference in how people respond.
Have you seen situations where the team actually ends up liking the AI tools more than leadership expected?
Yeah, actually. One of my clients, a mid-sized CAS firm in Texas, was really hesitant about AI. The partners were pushing for it, but the staff was skeptical. They thought it was going to replace them. But once they started using it and realized it was just taking over the boring stuff, like matching invoices and categorizing transactions, they got on board pretty quickly. Because now they had more time for the interesting work, like client advisory and problem solving.
So it actually made their jobs better.
Exactly. And that's the message firm owners need to communicate. AI isn't here to replace accountants. It's here to take over the repetitive tasks so accountants can focus on the high-value stuff that requires human judgment.
Okay, so let's talk about cost. Because I think that's a big concern for smaller firms. What does it actually cost to add AI to your tech stack?
Yeah, this is where it gets tricky. Because the subscription costs aren't that bad. Like, most AI tools are $50 to $200 per user per month. But the real cost is the time investment. You need time to set it up, time to train your team, time to troubleshoot when things go wrong. And if you're not careful, that can eat up more hours than the tool saves in the first few months.
So how do you calculate ROI on something like that?
I tell firms to think about it in quarters, not months. Like, don't expect positive ROI in month 1 or even month 2. But by the end of quarter 1, you should be seeing clear time savings. And by quarter 2, you should be seeing either cost savings or the ability to take on more clients without adding headcount. If you're not seeing that by quarter 2, something's wrong. Either the tool isn't a good fit or the implementation needs work.
So if you're evaluating AI tools right now, don't just look at the monthly subscription cost. Factor in the time it's going to take to get it running smoothly. And be realistic about how long that's going to take. All right, Sam, let's talk about where this is all heading. What do you think AI in CAS firms looks like 3 years from now?
Okay, so I think we're going to see 3 big shifts. Number 1, AI is going to get way better at context. Right now, most AI tools are pretty narrow. Like, they're good at one thing, but they don't understand the bigger picture. But in 3 years, I think we'll have AI that can look at a client's entire financial situation, their P&L, their cash flow, their industry benchmarks, their business goals, and actually make recommendations that take all of that into account.
So it's moving from task-level AI to strategic-level AI?
Exactly. And that's when it really starts to compete with fractional CFO work. Not replace it, but definitely change what a fractional CFO spends their time on.
Okay, what's shift number 2?
Shift number 2 is that AI is going to get embedded into everything. Like, you won't be choosing between QuickBooks or Xero versus an AI tool. AI will just be built into QuickBooks and Xero. It'll be the default, not the add-on. We're already seeing this with QuickBooks Intuit Assist and Xero's AI features. In 3 years, every major accounting platform is going to have native AI capabilities.
And if you're listening right now thinking, should I wait until AI is fully baked into my existing tools? That's a fair question. But my take is, if you wait, you're going to be behind the curve when those features do roll out. Better to start learning now with standalone tools so you're ready. Sam, what's shift number 3?
Shift number 3 is that clients are going to expect AI-powered insights. Like, right now, if you deliver a P&L and a balance sheet, most clients are happy. But in 3 years, they're going to expect you to also provide AI-generated forecasts, scenario analysis, and predictive insights. And if you're not offering that, they're going to find a firm that is.
So it's not optional anymore, it's table stakes.
Right. And that's why I'm telling firms to start now. Because the learning curve is steep, and you don't want to be scrambling in 2 years when clients start asking for this stuff.
Okay, so let's make this super practical. If someone's listening to this right now and they want to take action this week, like they're ready to dip their toes into AI, what's step one?
Step 1, audit your current workflows. Like, literally sit down and write out every repetitive task your team does. Bank reconciliation, invoice processing, expense categorization, client email responses, all of it. Then, rank those tasks by 2 criteria: how much time they take and how annoying they are. Because if something takes 10 hours a week and everyone hates doing it, that's your first AI candidate.
I love that you're using annoying as a metric.
Hey, team morale matters. But seriously, that's how you prioritize. Because you want to start with something that will create immediate, visible relief for your team. That builds momentum.
Okay, so step one is audit your workflows. What's step two?
Step 2, pick one tool and commit to a 90-day trial. Not 5 tools, not let's test everything. One tool, 90 days. And during those 90 days, measure 3 things. 1, how much time are we saving? 2, how much does it cost, including setup time? 3, how does the team feel about it? At the end of 90 days, you'll know if it's working or if you need to try something else.
And if you're worried about committing to the wrong tool, here's what I'd say. You're going to learn more from 90 days with the wrong tool than you will from 6 months of research and no action. So just pick something and start. Sam, last question. What's the one thing you wish every CAS firm owner understood about AI?
I think the biggest thing is AI is not going to solve your fundamental business problems. Like, if your workflows are messy, AI is just going to automate the mess. If your team is burned out because you're understaffed, AI might help a little, but it's not going to fix the root issue. So my advice is, fix your foundation first. Get your processes documented, get your team trained, get your data clean. Then add AI on top of that. Because AI is a multiplier, and if you're multiplying chaos, you're just getting more chaos.
That's such a good point. AI is a tool, not a strategy.
Exactly. And the firms that get that, the ones who see AI as one piece of a bigger operational improvement plan, those are the ones who are actually winning with it.
Sam, this has been incredibly helpful. I think you've given people a really clear roadmap for how to think about AI without getting lost in the hype. Thanks for coming on.
Yeah, thanks for having me, Gary. This was fun.
All right, everyone. Here's what I want you to take away from this. 1, AI is real and it's useful, but it's not magic. 2, start small, pick one tool, commit to 90 days. 3, fix your processes first, then add AI. And if you want help figuring out which AI tool makes sense for your firm, head over to theledgerlabs.com. We're working with CAS firms on this stuff every day, and we'd love to help you get started. Until next time, remember, AI is a tool, not a replacement. Use it wisely. See you next week.